Siddharth Bhamre as well joins in from Angel to talk about the futures and options side of the market. Remember the expiry to deal with tomorrow. Siddharth, hi, morning. 5600 here, this expiry. How does it feel? And more importantly, what is it that you're picking up by way of trends for the next series now?
Good morning, Aisha. Well, it feels good looking market rallying in such a fashion. Good for guys who have been bullish, and we have been, and for business as well. So it feels good. What we are envisaging from here is we are getting more compelling reason to be bullish on market from current levels what we were at 4700 or 4800, and I'll highlight you a few reasons why. From short term perspective, if you look at that premium which is there for March series, though on closing it is showing you 56 points premium for March series compared to spot, but in yesterday's trading session it was as high as 62-65 points. Now what does that mean? This means that strong hands are tempting short guys to roll over their positions, because that would reduce their cost by 60 points, and they are discouraging people to not to roll over their long position, because the cost of rolling over is around 60 points, which clearly suggests. And if you look at the FII statistics, yesterday gross figures 7,500 crores, and the open interest has gone up. That means these guys who have been forming long positions, they are rolling their positions, but they are discouraging other guys who are having long positions to not to roll over, and encouraging short guys to roll over their positions. So in March series, you will see probably short covering again. Now that is one point. Second point, if I remove the FNO data aside and look at what is happening in equity. Now there are retail guys, HNI guys who are still adamant on the market, rolling over their short positions, holding their short positions, but don't have money, and hence they are selling their equity portfolios to fund their mark-to-market losses. Now what is happening, we are seeing from FI statistics as well, that every day they are buying 1,000 plus crores in cash market segment. DIs are selling say 80% of that figure, and rest of that is met by HNIs and retail. So there is a ownership change which is happening. Equity holding is going from weaker hands to stronger hands. Now this does not happen in a bear market rally where you will see 5-10% upside or 15% upside. This happens historically. We have seen that when equity changes hands, we have seen markets getting into a very good runs. I'm not saying it would be a mega bull run or something like that, but still there are no signs in this market of any major correction.
So Siddharth, this series, it has been power and real estate which have shown very well. Does it seem like this momentum could continue for the next few weeks as well?
Yeah, quite likely. What we are observing is most of the interest rate sensitives have been, quite vibrant. And it's not just what's happening in FNO, Aisha. If you look at the cash volumes of be it Unitech, DLF, India Bull Real Estate, HDL, these stocks have run up significantly. People have those people who got into, say, if case in point, HDL around 160, 170, squared off their position around 110, in an anticipation that market would come down again, and so would stock and will buy. And this is also one of the space where we are seeing a lot of change in hands, weaker hands moving out, stronger hands getting in. In infra names also, case being in point, IVRCL, GMR, Lanco. Even in these stocks we are seeing huge cash based volumes, and delivery based selling is also there. So that's the reason you are seeing quite strong momentum. So I don't say that this would be a linear progression, and these stocks may not correct. One bad day and you would see probably same stocks coming down by say 5-10%. But then those would be the opportunities to again re-enter into these stocks. So overall market I'm bullish, and so would be these high beta names.
Siddharth, what about ADAG stocks? Would you advise retail traders who are in the money in some of these ADAG stocks, they should roll over their positions to the March series?
Nikunj, I have missed out on the rally in most of the ADAG counters. Reason being, when they were at lower levels, there was a lot of corporate governance issue, and there was a conscious call of not getting into it. And now we have seen that stocks have almost multiplied from lower levels. From data perspective, I think here also we are seeing good amount of long positions getting built up. But then looking at the high beta nature and the kind of news flows which continues to come in pink paper about this group, I would shy away. But those guys who are deep in the money, I think there's no harm in rolling over because the overall sentiments in markets are good. So irrespective of what kind of announcement come, these stocks are not going to correct significantly from current levels if market is showing good strength. And that is our call, that market is going to show good strength.
So Siddharth, nail it down to one Nifty strategy and one stock specific strategy for the March series.
Difficult to say that way, but I am going long Nifty. Certainly, I'll be going long on the previous speaker mentioned his best stock. I think ICICI Bank has potential to give around 20 to 25% from current levels, and I won't be surprised if that happens in one or two series itself. So that would be one stock. Apart from that, I am also getting into names like NTPC. Then if I look at some of the mid-cap stocks, then I'm liking CAC in power space, which Aisha was asking me. So that is one stock. There are a lot of other mid-caps which we are liking.